lot of buy sweeps that weren't just getting anywhere. And so tacked on to start a scalp, and we push down in. We get about a 20-point push out of that, and did not take profit. The question leading into this was about, what was the thought process on not taking profit on the first one, and then I had an ad. So this push down in showed some acceleration into that edge, into that high, into that LVN. And there's a stepwise process to this, and this is why we started recording, is that after this push in, boom, we get absorption through here. We create a liquidity zone. On this snap back, now we have a liquidity zone there. So where is that liquidity zone located? So it's located at the lower portion of this node versus this area of initiation. And that's showing me that the buyers are willing to step up and take on those orders. Now, luckily at the time, seeing the activity up here was positioned above, right upon the edge, and working this press, or being patiently waiting for this push down and across that node. But I mentioned that I took it off the table when we pressed down into the 70 range, and was not going to fight that liquidity zone. And the reason being is because the activity came in, buyers stepped up here. And so when I see that, even though we have this here, zone of initiation, my thought process is we're either going to jam up and out of this from that absorption, or what do? What we talk about, like on the weekly plan stuff, we tag back into the edge of the prior distribution, and if it fails, it's quick. And so that's pretty much what we did. I was not in on this sweep, seeing the 400 some plus in the liquidity zone after this aggressive move up. I knew that I'm trading against a grain, and so at that point I was looking at this going, let's just extract it. We get a test down into this prior distribution and beeline up and out of that, come right back across the zone. And so that's strong. That's pretty darn strong. And this is something that you'd even look for like continuation type trade. So you spend some time up here, you're saying there's no way people are buying after this. Well, here's the deal. They did. They stepped up and bought. And so if you're not stepping in on liquidity zone and you want to be more patient, then you can allow it to test into that prior distribution and respond. If it's going to flush, if it's going to liquidate, it's not going to wait for you, so you won't be on board for a short. It'll liquidate. However, if we test down into the zone like this, we get an extreme read on delta map, we immediately move back into the prior distribution. This is where now you have a defined risk to be able to get on board, and let's say risk 10 points or so across that zone to get going to the upside. But if you're shorting this, you have to be nimble. You cannot allow this to gravitate up, up, up. Now, you need that refreshing in here, and you need continual quick moves down and in. So it was a bit slow up here, and then fast. Fast. We get enough buyers stepping up, and completely reverses those positions. So I'll pause this here.
Recording stopped.
Does that answer your question there, Brian?
Yeah, it does. Thanks. I'm trying to think back to that trade. I stepped away for a while, but I was listening to AJ and Leo's live broadcast.
Yeah.
And
nice.
I may be mistaken, but I think that AJ was trying to get long in ES in that zone. So I was kind of I was short. I think I had a pretty good entry. AJ's talking about getting long, and I basically got scared out of the trade. And I need to just have my own idea and stick to it, and let it play out and live with the results. And I didn't do that.
Yeah, sure. We're all going to trade a little bit different.
Oh yeah.
Right?
Yeah.
And so it's okay to scalp short into this. But left to right, based upon your thought process versus what AJ was discussing, left to right, we spent time in this tight consolidation. And I said this morning, um, early on in the chat, let me pull this through here, get rid of that profile, is that through this here, if we get underneath pivot, I am reoffering 60s. If we slam this down, reoffering 60s. And I did not provide a scenario for the upside, because we definitely have the propensity to be able to traverse that zone where the pivot balance is, go all the way up to 295. And so that's quite a move up. And so in doing that, I was also not prepared for a push up and out. I was waiting for a scenario down and in, right? That didn't happen. Instead, we get an aggressive move up. So from left to right, based upon your scenario and thought process, we have to keep in mind that what has just occurred was aggressive here, right? And we can pull back into that and find bid along the way and keep on to that move. In order to negate this move, we have to come back into the opening range, essentially. Give up that entire leg. And so the scalp from my end this morning was simply, I was sidelined watching this fun happen here, looking at this going, okay, so rule of thumb, I will start paying attention to the DOM at about 100, 120 points on NQ when it starts to move without any type of 10 or 20 point rotation. Right? We get a little bit of a 10-point rotation through here, but basically straight up. And so we come into a zone on the high time frame. We had an LVN on a five-day rolling, was it? And in the 90s. And so we get a bit of a response up here, and we see that push, and that's where, hey, I'll start paying attention to this, but also taking into consideration if we don't really start to hit the gas pedal underneath of that, this is off and can be painful for anybody trying to force it. So with AJ's comment, I'm gonna have to piggyback on top of that, in that we had an aggressive move and flip the paradigm a little bit, not looking for shorts or not interested in scalping short. Instead, where do I want to start gauging in long from here? And that's not the wrong concept at all. Neither is yours from
If I
trying
can,
to
I
go
think
ahead.
add some context as well, is that if you, um, AJ's been very clear about following trend and going with the current trend and the current momentum, and following that breakout to the upside from the OR. I know what AJ is looking for is a continuation trade. What you took. So I think that you need to frame it in that everybody has the kind of style and strategy
Sure.
that they operate in. And so don't let the fact that, AJ was trying to getting into a long continuation trade setup scare you out of your short trade. I mean, you guys are operating on two different frequencies at that point, right?
Yeah. Yep. And where you were looking there, Brian, was spot on, up in the 90s. And so no issue with that. Just don't let that build any further above. And once you get a look below that distribution, that speaks. And it's okay if you have your brackets set in place and you're looking at one at 30. I got a 25-point bracket. I got a 40-point bracket. If they're not tagged, but you see that activity come into play and you know what you're looking at, and you also know that you're trading against a grain from initiation, it's okay. It's okay just to cut it. Okay to flatten it. It's okay to take off the table your 2-digit odd amount of points instead of allowing it to come into a bracket, if at that point you see an exhaustive look. And yeah, that's what I was trying to convey this morning with those, is that I was looking to start in, okay, put another one on. I want to get this push across this zone. And I was looking to add if we were going to get below that zone of initiation. Didn't happen. In fact, between the liquidity zone, buyer stepping back in and so forth, it just wasn't looking good. It wasn't looking like it was in my favor. And so at that point, I need to reassess and say, okay, well, what is it about this area that we're in, this current auction that we're in, that I missed the opening leg, zone in on the short scalp, but the short scalp is also not moving like a dominant leg of a move. And so when that occurs, it's hey, like either step back, reevaluate, or so forth. But definitely get used to having input coming into the brain from outside sources or other traders, and simply hearing them out, giving the thumbs up, and so forth, especially while you're managing a trade. If you're managing a trade, then you should cognitively be exercising that Y chromosome viewers for selective hearing. You got me?
Oh yeah. Hey, one more question. If Leo chime in, please, if you're
Yeah.
still here. In that short scalp, I think I got a pretty good entry. And when I saw the liquidity zone form, and then there was actually a delta flip up just after that.
Yeah, no bueno.
That's when I bailed. I can't fight two bullish indicators. That's in my
that's
own
excellent.
brain. I won't do that.
Well,
I
I would say
mean,
that's a good trade.
yeah, I think you did the right thing. And even though the market went down a little bit more after that, if you made the same decision 100 times and seen that same sequence, it's likely the right idea, the right approach.
Yeah, more times than not. Yeah.
Right. Because we can't look at every single trade in a vacuum and say, okay, well, in this, how could I have executed this short better? We have to say, okay, if I'm presented with this same information, the same outlook, I need to approach it the same every time out of 100 times the same way. So that removes the immediate the immediate effect of, okay, well, I took this trade, I saw this activity, I got out of the trade would have worked, so therefore I shouldn't have done the thing that I did. But in reality, maybe it's you made the correct decision, and if you did that 100, if you made that same decision 100 times out of 100 times, the net would be a positive impact, to where, if you made the same decision 100 times, you would have a net positive versus a net negative, where if you held the trade out of the 100 times and you got all the bullish, information, but you ignored it, more often than not, you're getting, stopped out or whatever.
Yeah, or blown out.
Like a diaper.
Yeah, a lot of diapers.
Hey, thanks for that visual.
Yep.
Job said it, not me.
But do you honestly, like neurologically, do you know the only type of memory or sense linked to memory?
Smell.
Exactly. Okay, so I added a little bit more context there. Sorry about that. But yes, that push up and out. So we come back up and out right now, testing outside of previous week's value high. And I always go back to this chart because week to date profile. And somebody asked me recently, like, how are you drawing the week to date profile, or what are the settings? I'm just drawing it from my planning chart from that candle. Is this what the previous week's ends on? After I assess this here, grab this, drag it out, and what we notice is push down in last night. And this type of activity is pretty prime in that, uh, yes, it should be no surprise at this point that we get the monster LVN right at week pivot. But it pushes us up into this distribution, and we have the likelihood of just rotating around this. Now, I'm really excited for the update with the one-on-one section. It's going to be efficient, but I want to dive back into, with everybody, um, the basics of rotating around nodes. That way, we're speaking the same language when we're talking, and it might not jive with everybody's type of trading, and that's fine. I can only share the way I see things, and that's not the perfect way. Obviously, there's a million ways to skin a cat, and so, but as I was going back through and reviewing some of that material for updating, it made me think about this here coming into the session. This is truly a line in the sand, okay? But it's a current week. Overall, we have this giant node right here, right? Which puts our line in the sand down here between testing into the 1B to this LVN right here at 710 and up here in 20s around the 1A, right? We're just rotating around this node. So is this bearish or bullish?
Bullish right now.
It's bullish right now. And so I asked that, and I've asked that before, and I'll tell you that, like, personally, I don't care. Like, it really doesn't matter to me. Working zone to zone, and the reason why these are automated to show this type of activity is because we get that responsive nature, and we do wind up testing down in and traversing a zone. And even in looking at this stuff as long as I have, there's plenty of time, like this morning here on this leg up, that I did not participate in this consolidation, looking at that going, I don't know. Well, if we push out, I have a scenario for reoffering this to come back to the bottom of the zone, did not create one for above. And then we wind up just, damn it, traversing this zone and kind of shake my head and go, huh, shouldn't be surprised. Come on, what are you doing? And so is it foolproof? No, it's not. If we test outside, come back in, are we always going to go to this side? No, but kind of what Leo mentioned with the LZs and so forth is what occurs more often? Is it ideal when you find yourself, where's ES here? When you find yourself coming outside, like last night, Andre mentioned wants a replay of this, and so I'll provide a replay of this. We test outside, we come back in, we consolidate the entire night. We tag this here in the RTH. Well, no. We tagged this here in the Euro session. Was that 2:30 Central-ish? And then we get this giant leg up. We're at the lower portion of the zone. Same thing with autoplot. Same thing with autoplot. And so when you're at that edge of a zone, you need to be aware of the response and how we react when we step outside, come back in, and so forth. And I'm not just speaking to you guys, I'm speaking to myself as well, because this is a continual process. If you've ever really gotten something down and you're absolutely honed in, sniper-like, accurate with it, continue to just discuss the basics with yourself over and over. Okay. Even if that becomes banal, it's important to do so because on the fly, you're not going to be thinking straight. I don't care who you are. You plan appropriately, you do your best to think with the activity on the fly, but have a sense of awareness. Have a sense of that awareness. Um, but is Tommy on? Hold on one second. All right, sorry for the delay there. Tommy, is Tommy on? Let's see, chat. Yep. Okay, he's here. Okay. Um, so in one of the recent office hours, I mentioned the different aspects of time frames and types of trades and so forth. And you're going to, along the way, build your own playbook based upon what you're seeing, and we can provide input towards that as far as share examples of trades and how we interact around MGI. I think it's no secret that like some of the, let's say some of the obvious ones, like the 5 minute opening range, and um, you know, that hits on you get an acceleration to one end or the other, and then you get a rebid or reoffer from the 5 minute OR mid. And then I talk about the edges of the pivot zones, the LVN return, the ledges. Okay. You don't have to tack in 30 things at once. But I did bring something up and I had a question on it. And so I will address that today, in that one type of short time frame scalp, and I'll put context to it today, is with a 1 hour profile. Okay. It should not be a surprise to anybody that I like the volume profile. Now, this is it. Okay. And so what you see is the balance zones around this. Okay. The pivot balance zones, pivot itself. And so what is the context from this? Okay. Where are we at in the vicinity to the edges of the zone? Where are we at with respect to pivot? Above pivot, push, push, push. Each one of these profiles is 1 hour. The yellow line is just part of your volume profile study on CR chart, and it isolates an LVN. What is the value for that? I don't even remember. I can look that up, but essentially it's just pointing out the don't be stupid meter from my end, saying, hey, this is the deepest one. And so you set that on a percentage base. And so how do I even utilize this? Well, the way I would utilize this, and I did not utilize this today, but I did bring this up in a recent conversation, is that when we push, if we have an ambiguous build, Gaussian build, and so forth, not interested, no action on it. The outlook on this is to extract quickly and have a very quick means of risk management. And so we get something like this, okay? During this particular hour, we're building here through this where I was scalping short, okay? And then we get this push up and out, we build here. Now we have a 1 hour profile here. Next hour opens, we test into the prior LVN, same concept as we talk about on a weekly, on the session by session, so forth. Just this is isolating that particular time frame, and the read on this is okay. Testing the prior distribution and fail. Get long against against the high volume edge to bring it back to distribution, take it off. It's not for your 100-point runner. Or in seeing an LVN return. So like this. Not the cleanest example, but this is where we are today. So we have this push down in, we drive back into the prior distribution, test back into here, LVN return for a push back across through here. If you're looking to short this, right up here into this mix provides a pause, and your risk should not be 21, see, 20, 23 to 29. Your risk should not even be 10 points on this type of activity into that prior distribution. So I'm looking at this through a microscope in order to be able to just assess on the fly if I'm scalping activity. Now, when I utilize this, I'm not countering the overall move. So we're above pivot, okay? Until we see something drastic happen, I'm only looking for longs on that, all right, for this type of setup on my end. And so it has to be appropriate. It doesn't matter if we jam down in and across the board here. On the right is a 4-hour rolling volume profile. But essentially, where do long setups occur within these looks? Because we're above pivot and we're coming from the lower portion of the pivot balance zones. Outside of that context, running this on the fly or just randomly would probably make me lose more hair than I've currently lost already. Because at least I'm able to incorporate the idea of where I'm at from the big picture. Okay. So it's a 1-hour profile here like this, just a 1-hour bar. I mean, you guys have footprint candles and so forth. You can reproduce this as easily. It's a 1-minute candle, right? And I'm not looking at this purely where does the candle close and so forth. It just gives me an idea of where to start paying attention to something like a dominator, EAD, or DOM activity. Okay. So this was something that was brought up in a previous conversation. It's one direction, and I do not like to fade when I'm doing this. This is for me getting on board with the move. And, you know, I'm sure that you can get very similar information from your footprint candle and so forth. It's just this meets my eye a little bit easier when I'm looking just to extract pops out of the market itself. And it's not on every single profile. It's not on every single hour. It is something like this. We have acceleration up, the zone of initiation. Okay, that's identified. We push down in, looking for bid in here, looking for just a push back into that distribution, extract, extract, extract. Okay, that's off. Okay, now wait. Drive down in, create a node, come back up and out. That node overlaps with the 4-hour rolling LVN down here. We push back up in distribution. Okay, this is no longer something you want to short. Get on board. Or you have a dominator printing in this zone and you're looking at this going, you know, it's kind of gray through my thought process. What is occurring provides just a little bit of context. So I don't mean to overwhelm when I bring in a different style of setup or so forth. And I also don't employ this every single day. But for me, it's slow enough to be able to interact with and quick enough to provide setups and reasonable risk. So that's why I wanted to share that. Tommy asked me a question about it, asked me to bring it back up. And so that's that. if there's any questions on that, just let me know. But it's literally the same concepts of what we discussed from the other time frames as well. You have to have the context of where you're at with regard to the structural tools. And especially when you have your executional tool stepping in with you, and you can have that microscope, that vision of what is occurring. Yes. Can you see that on DOM activity? Yes. Can you see it on a volume profile? Yes. But the foundation of that is laid in the awareness of where we are with the activity from our structural tools. So I hope that clarifies that previous conversation. Just let me know, Tommy. Kind of same thing. If you were to look at this chart and I told you it was a 1 hour volume profile, and we push up into the prior distribution, push back in, you would look at that and say, I want to bid this LVN. Same thing. We're above weekly pivot. That LVN is right over weekly pivot. We have the potential to accelerate and so forth. Yeah, same thing. But especially when we get down to the edge of a range, and we spent all night last night. Last night stepped in, try to put something on a reoffer in the low 20,000s to test down into these lows for continuation based upon an initiative type move. We didn't come out on NQ. Honestly, missed the look on ES. It was short lived. So you'll see that in chat. Had didn't just sit and manage it. Put that on with a defined risk against the weekly pivot. And even though we had a couple nice pushes, about 30 some odd points in, that wasn't intended to be a scalp. It was gonna run or be off by the time I wake up.
So you didn't have a target on that, Joe?
No,
Okay.
nope. So here we are, top of this zone with ES. Not quite there, 820s, top of this zone here, but we're coming into this above distribution at 793s. Basically near previous weeks or the 2 weeks ago, this prior year high. So if you think about this as pivot zones and group these here, then this LVN right here around 805, certainly important on the fork rolling. I wouldn't say primary, but if we push that there, then I'll expect us to start to beeline towards the 1A, which then we'd have to start gauging response. If we get a response from this here, okay, we don't quite cross the zone, and that's where we can get something like we push up, we get a little liquidation, we come back in, and we fill and push again. On the week to date, we can see which side is more finished on the inside volume profile. Anybody?
The
I think,
lower end's finished.
yeah. So if that's a question you can answer to yourself during the day, I think you're going to save yourself a lot of stress. First off, which side on the session is more finished? All right, does that align with my plan? Where do we go from here, and so forth? So this up here is not as finished, and I believe it was last week where we even discussed NQ and ES. Said, hey, on the week to date, this is not finished, and we wind up coming up, finish it. It was 2 weeks ago. This one. So let me see if I can pull it up. I don't know why it's not pulling up, but I'll figure it out later. Essentially, the upper portion is not finished, and being that we've already not able to find interest for continuation down below weekly pivot, it needs to be respected, even though it gets slow. And so within this zone, where do we interact? Well, here's the S currently. And so some areas of interest, we get a bit of a taper up here. We got POC up high. I'd be looking at IB high right here. And if we look at where IB high is, that's where we begin to accelerate up into this small consolidation. And the other one would be down here in the 57.72 range. But Delta Map painting a pretty darn good picture of, hey, we're getting overzealous here. Getting overzealous. EAD stepping in earlier today. Didn't even see that earlier. Just pushes up and out. These sequences are meaningful. There are so many different sequences that you can have on DOM activity and transacted time and sales. But when you're seeing either the EAD or the dominator step in, then there's something occurring. If it gets run over, then that should speak as well. But you often get something like this. But the exhaustive looks on the Delta map pretty clear today. On the buy side and the sell side. I think the biggest thing that I've seen through DMs and so forth is being capable of executing on the right side of activity. And so if you're not confident or have a good read on something, then A, find the gray areas, what's occurring, and B, don't step in with size. And either set a default risk on that particular position or don't take it at all. We have any questions or anything? So one of the things that I noticed this morning, I thought we'd get a little bit more push from it, but we did not. And so even when I was taking that scalp, looking at this going, son of a gun, VIX is out of the pivot balance zone. So regardless of your feelings on doing some analysis on VIX, there's volume traded on the futures contract. And so you can assess that activity and we can map it. And so when you're seeing this move back and forth, obviously last night we saw this push up to the top of zone, push up to the top zone. And then towards the morning, even though the indices are basically going flat to slowly testing the downside, VIX is falling off the map. And then we step below the pivot balance zones. And then we find ourselves in a day at bid. And so if you do find yourself in a counter type scalp or something like that, let this be a warning to, hey, if you've been given points, prepare to take them out of the market. And it would be different if we saw something like this come back and it's settling at the bottom here. And we've had a moderate bid, and we're basically going sideways. This here would tell me to look for another liquidation and see the sucker spike again. We're not seeing that. Not seeing that in this right now anyway. There's plenty of meat on the bone with NQ and ES. Yeah, so don't get antsy about trying to top and bottom tick. So I know it bounced around quite a bit. But
Hey, Joe, I've got a question about that 4 hour chart you've got up right there.
yep.
Um, this may be a bad word and not in your vocabulary, but I don't know that I've ever seen you draw a trend line, except to just show like a zone or something, just to throw something on a chart, but not one that's on your chart and staying there.
I'm sorry, you broke up a little bit. What did you say?
I don't, I'm going to bring up a word that I'm not sure you have ever used, and it's certainly not anything I've ever seen on one of your charts, but if you connect the lows on those four candles on NQ there on the 4 hour, they make a pretty good trend line. So that head fake we had lower yesterday after the close pretty much stopped right where you might expect.
Like that?
Uh-huh.
And what was that word again? I'm just giving you a hard
I
time.
know it won't stay on the chart, but
Yeah, I'm just giving you a hard time. Yeah, I don't draw trend lines. Most of what I look at is horizontal.
right.
Okay. I'm very well aware of like an upward type of balance, downward balance, looking for a waterfall type activity, an exhaustive look. But is there any merit to trend lines? No. No, I'm kidding. I don't know. I don't use them. And so I'm not going to speak on trend lines at all. Being that they don't serve me with my own trading. And so I'm not gonna say good or bad for anybody in the same way that I don't think your mechanic should be teaching you nutrition.
Fair enough. Thank you, sir.
Yep.
How about in the context of aggressive rebid, like a FOMO rebid? Because that's basically what a trend line is, right? Or reoffer.
I mean, if you think about it, I made a giant lie just now. And not that I use trend lines. That's not the lie. It's that we look at like a 45-degree build on a volume profile. I guess that's a trend line, right? Or we look at a ledge, that's a trend line. So if you're looking at time-based price activity, by all means, great. Can you put that in the context of what it means? Do you want to put this on there and that is a primary setup for you? I have, as requested from our last meeting, a series of questions for each of you to ask yourself. I'm developing this setup, and then it's a series of questions to see how much you know about yourself or your understanding of your setup. And so if I draw a trend line like this, where's it wrong? Where's your stop? And where's your entry? I guarantee that if we have, there's 24 people on here right now, we're going to have 24 different answers. Well, okay, I'd put my stop down here. I'd put my stop at the trend line, or once we tag the trend line, we close above, then I'd enter. And is that defined? And the other question I have is if you have um, like an MRI done, okay, and you don't have any fractures or pathology or cancer, things like that going on, right? You don't have any impaction of the spinal cord or this or that, but your doc looks at it and goes, yeah, not looking too bad. And there's clearly a narrowing or a stenosis of a particular level, and that, hey, it's not too bad, doesn't really provide the answer of how do I fix my problem. You take it to another person and they say, okay, well, you got stenosis here, and you might get multiple different answers across the board from a functional aspect of it, right? From a dry pathological read, you're going to get the same response. But what I'm getting at is can you actually put a group of people in a room on a 4-hour candlestick and a trend line and say, where's my entry and where's my stop? So I'm not saying it's wrong. Maybe that provides context for, hey, okay, since we bid out of here, then I want to trade in this direction. Correct? Right? So instead of using a trend line, for me, I will use our zones of value. I'll use the current builds and so forth. We're speaking the same language. It's different context. And when it's off, instead of just having a line, I've got the inventory. So I don't mean to sound insensitive to that. There is merit to it. But I guarantee that if you pop this exact chart up on a screen and you ask somebody to draw trend lines, they would go like this, like this, like this, and you'd wind up with an absolute mess. If that is your variable, don't change it. Stick to your variable. Don't add too many. But I do feel that you get more context out of isolating where inventory is on a horizontal sense and how we respond to that. So I think that was an excellent question, Brian. And I guarantee there's plenty who don't agree with me here. And that's okay. We don't have to agree. I don't use it. And I'm also not knocking it. I'm explaining why I don't use it.
Yeah, I generally agree with you. It's not something I trade off of, but I think in the context of a, a representative portion of the participants do look at those kind of things, and that's a logical spot where you might see a reaction. So if you were looking for a target to the downside, for instance, that might be a decent spot to put a target or just above it. But as far as trade initiation goes, I never use trend lines for that.
Sure. Yeah. Yeah, just to have an idea and so forth. I think you mentioned where a targeted portion of the population is looking, and that's actually if you want to summarize my trading at all, it's pretty much that. It's where is the targeted portion of inventory not available? Where are they not trading? And that gives me things like this, setups like LVN returns. We have low inventory, so forth. And so I spend quite a bit more time just assessing this on where people are not versus where they are. Because where they are, we're going to have some rotation, some two-way trade, and so forth. And I want to isolate where that changes.
Hey, Joe, one thing I thought about with like those 4 hour lows, one way I looked at it was that, if we did push past that with those kind of stacked up, like almost one time framing up, that it would accelerate through the area if we did take out, say, the first one.
Absolutely.
I think that like when it comes to like those trend line things, or because like how you talk about like those upward balances,
Mhm.
and when they exhaust and kind of come back, they just run like right through it, you know. So that was one way I was kind of looking at those lows today on the 4 hour chart.
Yeah. And I'm sorry. Honest, Leo, you're teaching your 5-year-old about trend lines. I don't believe you. But honestly, man, Brian, hard conversation. I don't draw trend lines on my chart, but now that who was that? Was that Will?
Oh,
Oh, it's
just
Thomas. Um, yeah, this is something that I am aware multiple lows and so forth, because when that type of inventory is cut off, then you're likely to have some acceleration. You start to breach that, you get a liquidation. So, man, you guys got me today. I don't draw trend lines. I'm also aware of multiple lows in sequence, kind of like a 45-degree build. I'm not sure how else to say it, but I don't trade trend lines. But you're right, Thomas, with that. Yeah, so yeah, didn't mean to sound snarky with trend lines and so forth. Just trying to get a point across, be like, eh, where we're building volume is where I'm focused, essentially. It's not the end all be all. You won't see our pivots diagonal, I guess.
That's not the next OFL tool.
Diagonal pivots. Leo, what do you think? We do diagonal pivots?
No comment.
I,
What
I
about
want to see a GAN fan
triangles?
on your chart now.
What's that?
I
I'll
want to
put
see a
a
GAN
hey,
fan.
I'll put gamma options levels on my charts before I do anything crooked. I mean, anything that's not horizontal.
All right, so I want to step into this next topic, which is moon cycles. Man, crickets.
It's a tough crowd.
Tough crowd there. All good. Yeah, clearly. I'll trade that either.
I think when it comes to a lot of that stuff, trend lines or just really any, and I think trend lines can be really accurate, but generally what they show will also be shown. There's a lot of times that I've looked back and forth at different types of analysis from completely different folks and learned different strategies, and they generally show the same important things at the same areas.
Yeah, context. I don't care how you derive it. Just don't marry it. Don't marry a trend line. Because you get an upward slope, turns into a horizontal balance, and then when that breaks, then you get a drawdown. And that's what I've seen much too often, is that, okay, well, it's upward and then it went horizontal, and so therefore basically it's upward, and this is favoring to the upside, so we're going to be, maybe it's just going to stop run this here, that type of stuff.
I think my problem with trend lines is if you do take it, like where do you set your stop? Your risk has to be wide because ultimately you're not wrong until the lower flat line. So it's like
Right.
It's just too difficult to play, or else you got to scale in over, a 20, 30 point range, which I guess you can do, but it's not how I trade.
Well, I think it's time frame dependent because on a 4 hour chart, you're talking about maybe something that more likely would resemble a swing trade.
Okay, so let's go ahead and step over
I mean,
to,
looking at the volume profile all the way to the right, the rolling 4 week profile, you do have some structure to lean on.
so let's talk about a trend line on this. Okay. Am I drawing this correct? Something like that. Okay. So when that breaks, where do we go?
Well, actually, like if you want to make this a larger context, like the whole peak above and fail, peak below and fail, you always hear people saying it, but like when do you know it fails? When, like
Yeah,
where's the
no,
peak?
that's what I'm asking. So if we were to break this trend line right here, what are my scenarios? Where does it fail and when does it fail and where is the risk placed? This is currently happening in ES. Where do we go if that line breaks?
Bye.
Don't be shy, please.
I would use the same context that you use for a rebid reoffer situation. If you get a strong reaction down through it, then you would have the potential to reoffer it with your stop on the other side.
Okay. Anybody else? I'm not, that's absolutely right. Anybody else want to provide some input on this?
If
And
you look,
glad to
if
provide my
you
input.
land, it would probably land right up towards the high volume edge, a couple bars over, right? So, like if it breaks, if three of those little Renko candles from out, it broke down through, you're going to move laterally, you're going to move left to right. The stop might line up pretty well with existing context. This isn't really an LVN return, but it could line up with that little high volume edge towards before the taper.
Anybody else want to provide input before I start chatting again? So if we breach this, we come back in, don't expect this to tag across the zone into the high volume edge to the IB high here, okay? Because essentially this is lining up with an LVN, all right? And there's a reason why this actually is going to work out really well is that we have this distribution, this one, and this one. Are we going up, down, sideways? We're going up, right? Therefore, if we breach that type of activity, come into the 91s, come across the IB, come across towards the IB high, potential for rebid, step below this into the high volume edge. But if you look at this line here, do you need this line in order to engage with this activity? And I'm asking sincerely. I'm not trying to be snarky or anything like that. I'm honestly trying to get a feel on who's looking at what, because if we look at this activity here, we're in the zone. We have delta map printing heavily red, and therefore this 92 range can provide support. Therefore, that would stop a lot of individuals if they're placing stops or risk management based on the line. If we tag down into that and come back into this distribution and run, great. But if we reach this line and start to hold under 92, it no longer shows me where we're going. It's not giving me more information other than the fact that we're going up, down, left, or right. Whereas if we look at where inventory is, if we leave this zone, then we have an idea of where we can respond further. And if you're going to do this manually with drawing trend lines, then you're going to wind up with a trend line coming off of a move based upon a break of that line and so forth. My point is that I think you guys are all smart enough to see upward activity, downward activity, and sideways activity. And from risk management aspect, then shift your eyes to where the distributions are, where you are within context of the pivots and so forth, and go from there. Can this liquidate? Can this hit some stops through this? Okay, we're going up like this. Can this start to trigger liquidation? Yep. But if I draw this trend line through here, is it giving me more information than push, build, push, build? And if you feel more comfortable with seeing the line and direction of movement, then I really recommend, even on a very fast time frame, speed that sucker up. A rolling volume profile. Watch price activity on a 1-minute candle and run that sucker fast. And you'll start to see push, build, push, reject, push, build, back into distribution and back and forth. And you'll start to see how we respond back and forth. Along the way, we have MGI, right? So with this through here, Delta Map printing heavy red, yeah, I mean, getting a little overzealous. We have a ton of, you almost caught me there. We got a ton of sell delta right here on the high volume edge. So you would want to see this bid up and out. But let's say that we were just jammed with buy delta up here and we're just resting here. And you're looking at this going, I'm going to buy this trend line. What I'm getting at is the information provided from a profile grants an understanding of scenarios and direction, as well as potential for excursion
ES delta bubble.
and continuation. ES down the bubble. Yes, it is. I'm not telling you not to use trend lines. What I'm saying is I think it'd be better if this was a mental thing. Like if you look at this and without even thinking at it, you're looking at this going, okay, we're clearly in an upward slope, and your mind already paints that picture of just a straight line through the mean of this candle rotation aspect. And then you look over at this and say, where are we at with regard to inventory? Because if we breach that, then, all right, let's push to here, that type of activity.
Yeah, I've got a question.
Yeah.
And I love to argue and debate and discuss. I don't actually myself use trend lines. I join.
There's no argue going on. I love the conversation.
Interesting to discuss stuff. And like that's how I would have used that trend line. But yeah, the volume profile stuff makes a ton of sense to me. What you were just describing, what helps me, because I do get confused about that. Like I just compress my chart. I compress the bars, the volume bars or Renko bars, whatever I'm using. And then the direction we're going in is like more clear to me.
Okay.
Like I'll compress it down a few times, like, maybe once every half an hour or 40 minutes, I'll just compress it down. Now with a trend line.
Okay. No, I drew that on purpose because here's the thing. Have you ever tried to start from scratch learning the volume profile? And you're like, what the heck? You're looking at these things and you gotta go back and forth and saying, well, is this actually a ledge? Or is this actually an LBN return and so forth? In the same way that you set alarms to wake up in the morning, if this is some sort of meter for you, by all means, go for it. Go for it. Just keep your context based upon where you're at. Okay.
So that's
what's that?
That's what my question was about. That sometimes I get in a little bit of trouble about this, and I didn't do too bad today. That I tried to short last week I've been trading ES. I tried to short last week's value area high. We sort of took a look up to it, sold a few points. We didn't sell a ton. I think it was we bid back from the overnight high, and there was an LVN, and I did had pretty fairly tight risk. It was the local high was the top of my risk, and I took a stop on that. But a lot of times, I have a hard time gauging, like even just this auction that we're looking at now, like putting appropriate weight on the MGI in comparison to the profile. Like the prior day's high is an extremely important piece of market generated information, right? So if we get back below that prior day's high, from a volume profile standpoint, and I want to reoffer that, and let's say I'm not going to reoffer it 3:15 in the afternoon, but if this was at 10:45, the profile is like not very conducive to it, you know? It's like my stop would have to be up at the high volume entry that you're at now, like 90.
Correct. Yeah. So here's
So just how to weight those appropriately, you know?
one second. Let me pause. So the volume profile up here is not conducive to shorting. Is what you're saying, correct?
I was saying, let's say we accelerated back through the prior day's high and I wanted to reoffer around the prior day's high.
Oh yeah. Oh yeah. So you'd be looking for a push just slightly back above. And so the MGI is going to grant you that idea of where we are on a day-to-day basis in the same way that the pivots are going to
Stopped out.
show you something like this, right? And so when we push up and in, are we going to respond to untested pivots? Sure. But is that response a zone or is it an absolute tick to the T? It's a zone. It's a zone. And so when we come up like this, if we were to push back through prior day's high, yes, that's that previous activity we're looking at, grants us some context we weren't able to hold. Outside of prior day's high, we saw acceleration, boom, down in. That's where I would still be looking at the session itself and saying, hey, from about this 790 to 793, that's where I'd like to reoffer and not risk more than 795.
Yeah, I'm early so much of the time. Like I don't think it's going to get there, and then I'll be watching the DOM and I'll see buyers or sellers start to step in underneath the prior day's high, and given in this scenario, and then I'll take my entry half size position, and then I end up with a 5.5 or 6 point stop, which I'd rather not have.
Yeah, sure. Yeah, in seeing that initiative look, it's certainly important. Certainly important, but also it's hard to wait for that to come back in the structure in order to engage with. So whether that's a limit order or as we push into that zone, you start to see a full stack flip and you mark it in. Waiting to get to that area is not the easiest thing. I think there's always a pull and tug on heartstrings to engage for potential.
Yeah, it's a big trading defect of mine.
Sure.
Being early, so yeah, this is the time, or hoping, but yeah, I've never traded with limit orders. I've never traded with like placing an order. Like you'd say in that instance, you would put a limit sell at 57.91.
Gotcha.
I'm asking you.
Oh, would I?
Yeah.
No. I would place a limit order if we jam down into like 80s. I'd place a limit order at 91 for a sell.
Yeah, that's what I'm talking about.
Yeah, okay. I thought you meant for a rebid.
Oh, sorry, I'm still stuck on this.
No, that's all good. So yeah, if this pushed down in like that, yeah, I'd put a starting limit order right here in the 91s because you have a defined out. I mean, if it goes up there, you don't want it.
Right, and you're at
there's a chance you're tagging this at the edge. And you've already seen initiative or stepping down and that activity coming through.
And if it pushes against you, you would add, depending on the order flow, up to 94.75.
Correct.
Okay, thank you.
Yep. Yeah. If you have your line in the sand, okay, you wouldn't just keep adding as this goes up to 5,800. But if we were to see what he's asking is if we see like an initiative move down in and we have this node up here, would I limit in here? Yep, I would. I'd put a limit on, start position, and would not be risking more than here. And so if we push up here and we're just rotating back and forth, would I add to that? Honestly, I'd rather add after we push away and get that first pullback again to go in. But if we're doing this here, yep, I'm not going to change any risk through that. We'll add across the board in that fashion in the same way that, let me give you an example here. So I mentioned if you're going to trade like Globex, or if you're going to act like Globex, I'm going to trade you like Globex. And so this was from not too long ago, and took in small scalps on the insides of balance, looking at the edges through here, back and forth, and just going in with singles back and forth. It's not too often you have a 20-point range on NQ. And when that occurs, do you have to engage with it? No. But you can go back through the Discord and see the context for that message. But essentially, what we're just seeing is I'm going to absorb this side, I'm going to absorb this side. And then it was just pushed back and forth. And it was so slow activity. It was very, very much like Globex. And therefore, I don't want to be on full position and take in 15 points of heat or anything like that. I prefer with a full position to maximum take in something like 7.5, maybe 9 or 10. But if you put on some starters and let them move, but you also know where it's off, then you're going to catch some movement along the way. Just take it off. Don't try to just leave it on and continually add to it and leave so much on the table. Let that rotate back and forth, and then boom, you'll get a move. If it's in your direction, then manage it and add to it. And if it's not, stop out.
Never had any problem stopping out.
Hey, Joe, can I ask a question about the current price action?
Sure.
Let's say you were fortunate enough to be in a runner from somewhere much lower, and we're nearing the end of the session.
Yeah. So are you on NQ or ES?
I'm sorry, NQ.
All right.
But ES, my question involves ES as well. So with respect to, what you might place a little more weight on, we're approaching the top of the balance zone in NQ, or we're at it.
Mm-hmm.
But we have the week open for ES just a little bit higher right in an LVN. Would you wait for ES, or would you be taking profit mechanically in NQ because of where we're at in NQ?
It depends on your entry. Where's your entry?
Let's just say it's much farther down and you're
Okay, so I wouldn't want to come back into value. And so we've already seen this rotation back that was negated, and we're pushing up into here. Yes, we're getting some overzealous buy side activity coming into M period. And we have this node here, second LVN back is right here around 60s, but value on the day is right here around 60. And so I would not want to see this come back into value, because if we escape